Well, David Bloom is Head of Global Currency Strategy at HSBC, and he joins me now.
Oh.
Welcome. Thank you very much for joining us. A rate hike would be poisonous, you say. Can you let us know why you think so at this time?
Well, we're getting a real income squeeze in the UK through food and energy prices, through VAT prices rising. But it's really how the market functions. You know, it was only 3 months ago where we were talking about ultra-tight fiscal policy and the possible of a double dip and QE2. And here we are 3 months later talking about rate rises and inflation. This market is fickle. And to switch from one to the other idea is what it does. 3 weeks ago in the Eurozone, we're talking about periphery bond crisis, cost of capital. Three weeks later, we're talking about high interest rates being good for the euro. This is how the market flips. And to follow the baying crowds would be absolutely wrong. We've got tough times ahead of us in the UK, and to raise rates now would be totally wrong.
But you can't discount inflation, can you?
Yes. There's good inflation and there's bad inflation. Good inflation would be asset prices rise, your house price rises. That erodes your debt. That would erode your mortgage, a wealth effect. You could get a wage rise and you'd think, yes, my mortgage doesn't look so bad anymore. That's in the inflation process. This is food and energy prices. This is because emerging markets are growing. This is a squeeze on real incomes. If we had a highly unionized labour force in the UK that could raise wages on the behalf of RPI linked, then I would be on that side. But we've got real income squeeze, the biggest since the 1950s. Have you got your gas bill yet? Have you put petrol in your car yet? This is a squeeze on real incomes. This isn't traditional inflation. And the nexus between an economy growing, interest rates, and a currency is broken. And suddenly we all believe the transmission mechanism's back again, happy days, a little bit of inflation, raise rates, the currency goes up. This is not what's going on.
Now, if there was a rate hike, what effect, in your opinion, does that have on the pound?
Well, I think initially the pound will go up because that's the knee-jerk reaction we've known and loved from 1995 to 2007. But I think ultimately we'll turn around and we'll start looking at the fiscal side at some point. You see, what you have to remember is the UK's got ultra-loose monetary policy, so every time you get an inflation number, you get nervous. But we've got ultra-tight fiscal policy. You have to juxtapose that. And if we start getting weak numbers, we'll concentrate on the ultra-tight fiscal policy. And if the economy starts to turn down, and we've raised rates now, there's no coming back from that. So they talk about Bank of England credibility, but if they raise rates now and the economy goes down again, it's all over. Then they've really lost their credibility.
So what are you expecting? Are you expecting that we're going to hear some more dissenting voices on the Monetary Policy Committee, but actually no rise in rates for the next year?
I believe in good sense and good management, and in that I think there'll be no rate rise today. And I think we'll find that the economy is not as hot as people think. The real income squeeze is kicking in, and actually they won't do anything this year.
And in terms of QE, the potential for another round of it, would you discount that? Would you rule that out,
that's
or
my
do you
point.
think it's likely to happen?
Don't forget, we've got a referendum coming up as well in the UK, so there's some semblance of political risk. We've got massive fiscal tightening, which could lead to some type of union action and labour discord. We've got all that coming ahead of us. This isn't just about inflation picking up because the economy is growing. This is food and energy prices going up. This squeezes the amount of money you have to spend on other things is being eroded. And there's no ways that this economy is just growing and inflation's picking up. So I reckon in 3 months' time we'll be talking about QE2, we'll be talking about double dip, and we'll have forgotten completely, like it sees the sovereign debt crisis in Europe, just poof, it goes. This is how ephemeral the market is. And to fall in with a bay of people saying they need their credibility to raise rates, just nonsense.
Let's have a look outside the UK. In this high inflation world, which currencies are actually going to do well? Which currencies are going to gain?
Well, I think obviously the commodity producers that haven't done that well, we still believe in Asia and the Asian currencies. But the most important thing is what we don't believe in is the nexus between economics, interest rates, and the currency. And we've seen that in Brazil, where they did raise rates, but the currency didn't go up because they put a tax on. In Turkey, they cut rates, let the currency go down, and raise the reserve ratio. So this is a very different world. The mix is very different. So we still like some of the Asian currencies. We like some of the Scandi currencies. We like Canada. There's lots out there that you can like. But sterling, if they raise rates, is something that we will be fighting tooth and nail against.
Now, even if they don't raise rates for sterling, isn't there still a concern that it's actually people are a bit over-optimistic about it at the moment?
Yes, because I think that sterling has risen on the expectation of rate rises. And if those expectations get drawn away, then I think sterling will fall back to roughly 155, around that area. But generally, since the crisis has started, to buy sterling below 150 and to sell it above 160 has worked beautifully. It's stuck in this range because we're swinging, as I said, from ultra-tight fiscal policy, the world's going to end, ultra-loose monetary policy, there's going to be inflation, and we're just vacillating wildly between those two scenarios. And at the moment today is the pinnacle of the one scenario, monetary policy is too loose. But don't worry, it'll play out on the other side as well.
OK, we'll watch out for that, Dave Bloom.
Thank you very much
indeed.